I'm like looking at this and I'm like, did I just find the biggest arbitrage in the history of the stock market or what is going on here? Oh my gosh. Well, if you own some, let's say, put options on some stocks or you're short, I don't really like to short, I'd rather just buy puts. But if you own some puts and, market goes down that 15-20%, I mean, your put option should print money and should be significant sums of money. Because most people are expecting the market to go higher, right? Which is why calls almost always outweigh the amount of people buying puts. So basically, a bet against Lucid is betting a bankruptcy, and they might go bankrupt, by the way.
Hello. Yeah, Okta is lower as JMP Securities downgrades the stock.
Holy smokers, folks! I swear, none of my stuff works. Hello, hope everybody had a great Thanksgiving weekend out there. Hope you guys did tremendous. Hope you ate lots of food. I know I ate too dang much. Too dang much. Okay, hold your horses. None of my stuff's working. So they were talking there about small caps. It was an interesting kind of conversation they were having there. By the way, Shopify having a very good day. Congrats to all fellow Shopify bulls. Oh my gosh, they show me another Cyber Monday freaking ad. They're talking about small caps rolling, still having energy and those sorts of things. And I definitely think that is a potential. Wow, Shopify just crossed 100% plus upward move now on the year. But I definitely think there's potential for smalls to still have energy in this market. And I cannot get my mouse to work. Come on. I think my baby ruined my mouse. Seriously. In terms of smalls, I think they could still have energy really into next year because, I could see a potential where some people take some profits, some of the big techs. They don't want to take it in this year because obviously you got to pay taxes in this year. So I think they're going to wait till probably January, February, take some profits in some of those stocks, and then rotate some of that money into some of the smalls and mids. We got to see a sustained 6 to 12 month period of smalls and mids doing really good. If you're really going to kill off the bearishness of the market, as long as smalls and mids are seen as still kind of in a weaker place, people won't feel confident of no recession or anything like that. So if we can get, a sustained period here of smalls and mids rolling, then we're really, really talking. Okay, so iRobot shares plunged 19%. This is crazy. iRobot was just up huge a few days ago because supposedly the EU was supposed to let that go through. Now the EU is warning Amazon deal may restrict competition. That's wild. That's flipping flapjack and wild. You can now lease a Rivian R1T electric pickup in select markets. Interesting. Tesla sues Swedish government after postal workers allegedly block license plate deliveries. I might have to side with Tesla on this one. Yeah, that seems ridiculous. That's gone too far. There's a big difference between like striking and saying, I'm not going to go work down at the factory until you guys pay me more money, something like that. There's a whole different ballgame when postal workers won't even deliver license plates. Like, no. That's taking it way too far. So I would actually side with Tesla on that one. There. I'm way behind. Okay, so let's take a peek at what's going on out here in the real world. Shopify is my best stock here today. That one's up almost 5%. It's had a tremendous year. It's really had a tremendous month as well. In regards to Shopify, Elf on a Shelf is back up to $117. Don't be surprised if that one goes 120 plus here very soon. Elf on a Shelf is up about 3% today, just under 3%. Planet's up today. Fubo's up today, which continues on kind of the small cap trend. With Fubo being up today, only thing we're missing is Honest. If Honest was up as well, that would be really interesting. JWN up a little less than 2%. PayPal up about 1.5%. Amazon up a little more than 1% here today. Obviously, it looks like we got off to a really good holiday shopping season, which bodes very well for companies like Amazon, for companies like PayPal, for companies like Shopify, for even companies like Elf. Very, very bullish for those particular companies. Tesla Model is a little green today. Texas Roadhouse green, Skyworks green, Mattel green here today. I'm not sure it's going to be a green day for the public count, though, because Meta is down right now. So Target's down, Palantir's down, JP Morgan down, Cake down, Meta down. Now, those ones are all down less than 1%. Keep that in mind. Foot Locker's up 1%. I don't know what's going on with Foot Locker, why that one was in the news. CNBC puts a paywall on everything nowadays. Like, come on, CNBC. You got to put a paywall on everything, baby. We know about Shopify. Shopify's booming. Business is booming at Shopify. Foot Locker. Oh, so the share were down big. Foot Locker earlier was, I guess, down 5%. After Citi downgraded to sell from neutral, citing challenges from a weakening macroeconomic environment and high inventory. The revised outlook, by the way, I need to buy some stuff on Foot Locker Day. They got some actual good deals here today on Cyber Monday. The revised outlook with a new $1 billion target, 23% downside, hints at increased promotions, fall and holiday season. Well, they do have some good deals, I will say that. Suggests short-term margin sacrifices to address inventory, making a fiscal year 2024 turnaround challenging. Not if they can move through the inventory. The analyst anticipates reduction in fiscal year 2023 guidance from $1.30 to $1.50 to around $1 with lowered EPS estimate. No one cares about this year, though. Foot Locker could do that, and it doesn't matter. No one cares about Foot Locker in terms of what they're going to do this year. Everybody knows it's a trash year for Foot Locker this year. It's a restructuring year. When you're going through, Mary Dillon came over from Ulta, and she's, 2023 is a big restructuring year for the company, getting everything kind of lined up here the way she wants it for the company in 2024 and beyond to hopefully prosper, right? So I don't think anybody that's a shareholder of Foot Locker cares at all about this year's numbers. And it's all focused on 2024, 2025, and what this company's going to get back to, right? So there's some food for thought there. But that's intriguing. So a big comeback for Foot Locker here today, which is, once again, just, investors saying, we don't really care. Stock sold off at first. We don't really care. We're focused on 24 and beyond. Safety stocks. Some real weakness in safety stocks here today, huh, guys? We got, WK Kellogg down over 5 percentage points. General Mills down over 2%. Are we talking Jim or are we talking Jelly? Is down over 2% here today. Kellanova's down, Campbell's Flip and Flapjack and Soup's down, Monster down, Pepsi down, Dollar Tree down, Kroger down, Coca-Cola down, Kraft Heinz down, Target down, Procter & Gamble down, Apple down. Dollar General slightly up. We got Clorox up, Microsoft up, Walmart slightly up, Costco. But the up stocks are all up less than 1%. So interesting. Let's look at my possible buys watch list here. Avant Brands looks like the weakest stock here today so far, down about 2%. Wynn's second weakest stock trading at about 87, and then Foot Locker's the third weakest there. Estee Lauder chilling out a bit. TJX still TJX. I gotta spend more work on TJX. I spent a lot of this weekend, guys, on Zoom and Alibaba. Zoom and Alibaba is where I spent a lot of my time and attention this weekend. I gotta take a deeper look at TJX. Gotta take a deeper look there and see. See what's going on, because I did like that TJX story when I looked into it a little bit there. So I might have to peek a little deeper. Looks like Trade Desk is up over 3% here today. Etsy's up about 3%. SoFi's up about 2.5%. Hood's up, Bro's up, Zoom's up, PayPal's up, Nvidia. Guess was interesting too. Got to take a deeper peek at Guess. But sometimes those companies, I do think, like, if they only have one growth lever, do I want to buy that stock? Or do I want to buy just stocks that have multiple growth levers, multiple ways they can grow their businesses, right? Shopify is a good example of that. Shopify is a stock that they have so many different growth levers to grow their business overall. It's tremendous, right? I mean, it's not just like e-commerce. It's in-store. It's payments. It's running the back end for businesses. I mean, Shopify has a million ways to grow that business. You look at a stock like Amazon. Like, Amazon has so many ways to grow. It's not just about people ordering more packages from Amazon. It's about, obviously, the cloud. It's about Whole Foods. It's about Twitch, which we're watching this on, right? It's about so many different business lines. It's about their advertising business. So I sometimes I do consider, like, are stocks worth it if they only have one growth lever for them overall? Or do I want stocks that have multiple growth levers? Because the nice thing with multiple growth lever companies is they got many ways to grow, other than just one being, having all their eggs in one basket, something like that. So 6 stocks I'm hedged against here today. Polaris is down big. At some point, I'm going to have to take my huge profit in Polaris. I made a lot on Polaris. At some point, I need to take my profit. And I've got to... I don't know. I got to take my Polaris profit at some point in time. I just don't know if I want to wait till the first quarter. Go ahead and make the move now.
A weekend, and I think we're in the same kind of environment, which is a pretty broad trading range that's going to be more challenging for 2024. So, as we get into January, I think those two components are going to be very important to keep an eye on to determine what the remainder of the year is going to look like.
Yeah, forgive me, I didn't mean to cut you off. I was going to say, what about financials, which I'm looking at are green for the year, but only 3%. Of the sectors that are green year to date, they're the worst performing next to materials.
Well, look, you need banks. Historically, if you go back and look at the last Fed rate hike of every cycle, what needs to happen for a good outcome for equities, and banks need to start performing. They've had a decent move off the lows. Again, they look a lot like the microcaps. They haven't really changed their stripes. I think on the bank index, which we watch, needs to break out through 90 to really suggest that there's a trend change. But that remains a pretty big question mark in this tape, and I would fully agree with that assessment that you laid out there.
Jeff, I appreciate it. We'll see you soon. Jeff DeGraff.
Thank you.
Joining us once again on Closing Bell. Up next, we're tracking the biggest movers as we head into the close. Steve Kovac standing by once again with that. Hey, Steve.
It's tough.
Yeah, Amazon's billion-dollar robotics deal is in peril, and crypto firm Binance's legal trouble is boosting a publicly traded rival. We'll tell you what's behind the moves when
let me
Closing
guess.
Bell returns after
Coinbase. Really tough decision here with this Polaris puts because they printed me a lot of money and a lot of freaking gains in a very short amount of time in the Patreon portfolio and the public account. This is a tough one though, because here's the thing. I could go ahead and take my profits today, let's say for instance, right? Now, the issue with that is I'm taking my profits into an uptrending market. At some point in time, the market's going to do a pullback, right? And if the market pulls back, likely a stock like Polaris would get hit as well. So let's say the S&P 500 pulls back 3%, 5% in January, something like that. Or December, I don't know, whenever some weakness comes. A stock like Polaris could get hit 5, 10, 15% in this sort of scenario. And so that's where I think like maybe I should wait to take my profit to then. Then I also think, am I getting greedy if I do it then, right? So, it's a really tough decision. But I know this business is not in a good place. Polaris, people just aren't buying that sort of stuff right now. These are high dollar amounts. These are bought on loans. This is not where the economy's strong right now, right? Anything like this. So this is something I look at and I say, damn, man, do I want to take my profit and run? See, analysts already have numbers being down a lot for earnings per share in this quarter, down 24%. I already have revenue being down 7% for this quarter, another 7% next quarter. So right now I'm sitting on over a 100% gain on my puts in the Patreon portfolio, and I'm sitting on 60 to 70% gains in the public account one. That's a lot of money to be made in a short amount of time. See, the thing is, the Polaris weakness in their business model, just started. I think it's going to continue into 2024. But the question is, how long do I want to play that game for? Their business literally just started to decline here. The sales went down last quarter, adjusted gross profit margin went down, adjusted EBITDA margin went down, adjusted EPS was down. They talk about this is in last quarter, and this quarter was reported in October. So keep in mind that information is over a month outdated now at this point in time. But they were saying recreation demand remains soft. Elevated promotions, although still below 2019 levels. That's kind of a little bit scary right there. They're talking about elevated promotions, but they're talking about it's still below 2019 levels. So what happens when the promotional activity just gets back to 2019 levels, which let's assume happens in 2024? That's intriguing. Yeah, I mean, I just think the consumer is spending on small ticket purchases, right? So they're spending a lot on Black Friday, spending $100 at this place and $50 at this place and $200 at this place and going to the restaurant, things like that. All small ticket purchases. Almost everything this company sells is $10,000 plus, right? $15,000, $20,000, $25,000. Those price points people are taking out loans to get them, right? And I'm just like, eh. And then there's a lot of expenses that come around, let's say, I don't know, you buy one of these ATVs or whatever. There's other expenses that come along with that. Then you got to buy a trailer if you don't already have one, right? There's a lot in gas you got to spend, to get to wherever you're trying to get to. And then obviously on the product itself, you're going to have to deal with insurance and taxes and all types of different crap. So it's a super big purchase usually when people are buying this type of stuff. They talk about they're shipping some new products. I bet you those are expensive. North American dealer inventory and seasonality. So off-road vehicle dealer inventory is, started to recently get back to kind of those levels, let's call it, that they were prior to Rona. And I mean, let's take a peek at a stock like Polaris. Where was it at prior to Rona? I think that's a fair question, right? So let's pull up a 5-year here. Guess what? It was kind of around where it's at right now. It's kind of where it was at right now. It was kind of between a $70 and $90 stock prior to Rona. Dang, they were booming back in 2015. Holy smokes. That was kind of boom times for them, 2014, 2015. Interesting. Yeah, that was an interesting time period, too, right here, because there was a gun boom going on in the United States. And I owned Cabela's back in those days. And Cabela's was this outdoor retailer. They ended up getting bought out by Bass Pro Shop over time. But Cabela's, where they were just selling guns and ammo like crazy during that time. I mean, really from 2012 to 2014, which is boom times for the gun business. And it kind of led to this overall outdoor-related kind of surge during that time period. Unemployment had started to come down significantly, so the consumer was getting in a better spot as far as the jobs market went. And there was a huge boom in the gun business, ammo business, and just kind of like outdoor-related stuff. And Cabela's was booming and it made me a fortune. It was one of my most successful stocks back in those days. And so Polaris probably went along for that ride because, I even remember going to Cabela stores back in the day. Like they sold all these different like off-road ATVs and types of stuff like that. And people were buying it. So anyways. But basically, prior to Rona, this stock's chilling $70 and $90 roughly, somewhere in there. 2018, 2019. So we're in that kind of range now, right? Q3 2023 dealer inventory was down 10% versus 2019 and up 85% versus 2022. Whoa. Oh. Okay. That's very telling on both sides of that. The fact that inventory actually wasn't even back to 2019 levels yet. It's probably going there, right? But also it's up 85% versus 2022, which just speaks volumes about, how low inventory really was. I mean, because 2020, 2021, we're talking about, that was just a time period. People were looking to do outdoor stuff. People weren't doing anything, right? They're cooped up in their homes. They can't go to the city. They can't be around people. So they want to do stuff, right? And so they buy these sorts of things and go have fun out in the woods or whatever, right? Or out in the desert. And huge boom, 2020, 2021, interest rates super low. People can get easy financing. And then business starts to kind of, let's call it straighten out a little bit in 2022. But really, Polaris had to fill a channel in 2022. So Polaris didn't really feel the effects yet because, and remember, for most of 2022, interest rates were still relatively low. It's really 2023 where we've really had to deal with the higher interest rates, right? And a consumer that's been hit by inflation for 2 years. So, somebody says, like your logic behind BABA, but what do you think Chinese tech stock ETF like CWeb? Yeah, it's like, it is interesting because you don't get the risk of just being in one stock, right? So I can understand that. But yeah, damn, I'm just in a tough place with Polaris because it's like, I look at the profit, I'm like, dang, I just take that, roll that into something else. But the other thing I got to consider in just a moment is where do I put that money, right? If I take the money I've made in the Polaris hedges, where do I put that money? I've got to hedge with that money. So where do I hedge at? So that's some, but also I do worry if the shit hasn't hit the fan, for lack of a better term, in regards to Polaris. And what if this stock still has a major flush coming? Like I'm talking a flush down to like 60s. I mean, my put options would be worth so much freaking money at that point in time. Ugh. And if I took my profit here and that baby goes down to 60s, ugh. That's going to be hard to forgive myself for. Let's just call it that. So, in the great financial crisis, the stock fell under $10 a share. Now, by no means am I expecting the stock to ever fall below $10 a share. But I did picture a scenario where Polaris fell to the $50 to $60 range, right? By the way, that's an insane move up. I was just thinking, man, if you were buying this in freaking 2009, oh my gosh. Look at the stock. In March 2009, stock $7. You know, you go out to 2013, end of 2013, it's $140+ stock. I mean, it's just crazy. Like if you buy when the market's crashing or in a really tough place, like my gosh, some of the gains on some of these stocks just ridiculous over that next 3, 4, 5 years. It's just crazy. This is the Indian motorcycle side of the business, like the gentleman was talking about earlier, in Iowa, right? Indian motorcycle retail was down low teens % year over year. That's not good. Market share 13%. Strongest motorcycle portfolio in our history. Well, yeah, you could always say that. Increased promotions from competition. Gross profit margin expansion continued. I wonder if that's really going to continue. So clearly the Indian motorcycle business is already not in a great place and could be getting in a worse place, right? To find a period where people made money on Polaris. So there's a lot of bag holders on Polaris that are down significantly on the stock and could be looking to go ahead and sell and take their losses in December. That's a good damn point. And also, a lot of those people are probably figuring, oh, Polaris numbers aren't going to be good next quarter. They're not going to be good the following quarter. There could even be weaker than analysts are forecasting. So there's a decent probability the stock's going to go down even further. So there could be a good chunk of people that are saying, you know, I'm going to go ahead and tax loss harvest this baby. Because we do know there's been a lot of stocks that have made people money this year. Obviously, Polaris isn't one of those. So it's very possible this one could continue to see weakness into year end. Very, very possible. That's a good point. Really good point. If I sell Polaris, take my profits there, and I put that money into another hedge, do I have something better I can hedge against in this market right now? I don't know. I don't know if there's any better opportunity. Somebody says Tesla. Well, the problem with Tesla is Cybertruck's coming, right? So everybody already knows Tesla business is not super strong right now. We all know that. We all know it's likely not going to be super strong in Q1, Q2, but we know Cybertruck is going to ramp next year, and that's going to add a new element to Tesla's business model. It's going to help the brand immensely. It's going to help a lot of things. And so I don't know if I necessarily would want to hedge that much more because I already have a hedge against Tesla. I don't know if I'd want to hedge more knowing that Cybertruck's coming next year. So, I mean, it's not that it's a bad one. It is something I'd consider maybe doing a little more. It's just like, do I really want to? I'm like, maybe. Somebody says end phase. Maybe. Somebody says Disney. Nah, I wouldn't want to hedge against Disney. Disney stock's already pretty devastated. Bob Iger's executing his turnaround. He's got a lot more work to do, but that man knows that business inside and out. He's probably going to turn it around. I wouldn't want to hedge against it. It's like, is it a stock I want to own? No, not really. Is it a stock I want to hedge against? Not really. Somebody says Apple. I mean, the problem with Apple is, I've tried to hedge against that one, and it's got such a cult shareholder base there of big money, and it's the biggest S&P 500 stock, so it's consistently always getting inflows of money to buy it, because so many people, are brainwashed to just kind of buy S&P 500, buy S&P 500, buy S&P 500. So Apple benefits more than anybody from that, right? Could someone briefly explain what hedging is? Hedging, the basic way I'd put it, is just like insurance for your portfolio. So obviously, let's say you got $100,000 in your portfolio. You're long the market, right? You need stocks to go up, right? You own 10 stocks and you got $100,000 in those stocks. You need the market to go up, right? What happens in a scenario where the market doesn't go up? It goes down 10%, 15%, 20%, something like that, right? The recession hits and everything's bad, blah, blah, blah. Well, if you own some, let's say, put options on some stocks, or you're short, I don't really like to short, I'd rather just buy puts. But if you own some puts and, a market goes down that 15, 20%, I mean, your put option should print money, and it should be significant sums of money. Because most of the time, most people are expecting the market to go higher, right? Which is why calls almost always outweigh the amount of people buying puts. So hedging is just kind of like insurance, right? No different than having health insurance. Like, nothing bad's probably going to happen to you, but it's nice to still have health insurance just in case something does, because those bills are expensive, right? It's like having car insurance. Like, are you going to get in a car accident? Probably not. If you do, and it's a bad one, and you're totaled your car, you're going to be wishing you had car insurance, right? So won't the other driver and everybody else. So that's where car insurance comes in handy, or, home insurance. And you're like, well, your house burns down, and, you could not have insurance on that, and then your house is probably not going to burn down, but damn, if it does, you're effed, right? Financially. And so the way I just kind of think about it is just insurance for your portfolio. Small amount goes a long way. I bet you have to pay a fortune for hedges on Lucid. Let's see. I bet you I'd have to pay a fortune. Oh, Jeremy, what the fuck? Come on, get your shit together, Jeremy. Oh my gosh, I'm looking at January 2024. I didn't even looking at January 2025. I'm like looking at this and I'm like, did I just find the biggest arbitrage in the history of the stock market, or what is going on here? Oh my gosh. Oh my gosh. I was like, I'm about to become a billionaire, folks. Oh my goodness. Ah, damn it. It's always a catch, huh? It's always a catch. Okay, so anyways. Let's look back at the 450s. Yeah, $1.22. Okay, that sounds right. That sounds accurate. I was about to say, damn, man, I found the world's greatest arbitrage here on Lucid stock. Okay, so $1.22. Yeah, that's what I was expecting. So that puts my break even at $3 and what would that be? So break even $3.28. Yeah, that's a problem with Lucid. So I need to go down to $3.28 just to break even. And it's if that 122 is accurate, I could have to pay 125, 128, 130, something like that. So yeah, even if I went $4 strikes, I mean, I don't know if this $4 one's more accurate than the other one, but the $4, let's say this is not accurate. Let's say this is actually the one that's accurate, okay? I mean, we're talking about, I got a $2.65 break even. I need Lucid to go down to $2.65 just to break even on that. That's not attractive. I need the company to go bankrupt. So basically, a bet against Lucid is betting a bankruptcy, and they might go bankrupt, by the way. There's a realistic potential, but I don't want to make my hedge a play that a company has to go bankrupt. Not my cup of tea in regards to that. So he's talking about WBA. I mean, WBA has been pretty disappointing, really disappointing, just to be quite honest. And obviously the Roz Brewer stuff not working out. I mean, with how touted of a CEO she was, or executive she was, coming in WBA. I mean, the fact that didn't work out. There might be board issues with the company overall. So I don't know, man. I don't know. Bitcoin hasn't been on a bull run. This is just a trickle. Yeah, it depends on what way you look at it. So people say up 100% plus from the lows. That's a massive move. So we'll see. We'll see. Do you think investment banks like Morgan Stanley and Goldman Sachs can massively benefit from these IPOs? Well, you need the whole IPO market to come down back in a substantial way. Anyways, that's going to wrap up today's live stream. It's getting too wild now. Appreciate y'all. Much love as always. Thanks for being here, folks. Got a big video coming out on the main channel in a few hours. And other than that, we'll join you tomorrow. We've got earnings on deck. We've got earnings on deck. Yes, we do. Tuesday, tomorrow's big day. CrowdStrike, Workday, Intuit, and Splunk are all reporting. Wednesday's a big day. We'll react to Foot Locker earnings and Dollar Tree earnings. That will be before the bell. And then we'll talk about Snowflake and Salesforce coming out after the bell on Wednesday. That should be a pretty fun live stream. I wouldn't be surprised if that'll be a busy one. And then Thursday, we have Ulta reporting, which is an important company for the overall retail industry, as well as obviously for companies like Elf on a Shelf. Okay. So anyways, guys, appreciate you. Much love as always. Thanks for being here. See you tomorrow and see you on the main channel tonight.